If you are into trading things like Forex, cryptocurrencies, and stocks, I want you to stop what you are doing and listen closely. What I am about to tell you is pretty cool. There is this new tool that can help you figure out when to buy and sell stuff to make money. It is based on how fast things are changing in the market. Imagine looking at a presentation where I explained this tool that is like a superpower, especially for cryptocurrencies like Bitcoin and Ethereum. It is great for quickly buying and selling them. Oh, and wait, there is more. I have come up with a whole plan using this tool. It is like a step-by-step guide that can help you make lots of money in the market. But I am not just saying this without proof. I am going to really test it out. I will try it out in more than 100 different situations to make sure it works well. I will start by putting in $1,000 to see how well it does. And if I am taking a risk, I want to get back a lot more than what I put in. I will look at how the price of Ethereum compared to USDT changes over 30 minutes to see if this plan works.
But before that, I want to introduce you to our backtesting service, as it makes it very easy and saves you time when backtesting your strategy. Thousands of traders are using Trader Edge to get an edge on their competition. It also has a lot of features that would definitely take you one step ahead of your trading career, just like the position calculator that serves as a great tool for risk management. Are you not sure how to backtest? No worries, you will also get a full step-by-step backtesting plan which has a $100 value. Not sure how to build a profitable trading strategy? No worries, you will also get a full course on how to build a profitable mechanical trading strategy, which has a $270 value. And if you sign up right now, they'll even throw in for pre-made high-quality strategies that have a $100 value. That's for $170 worth of bonuses, all for free. But only if you sign up right now. Trader Edge has a 7-day free trial, so there's absolutely no risk. Click the link in the description below.
Hey folks, let us dive into the world of trading using a special tool called Red Momentum Bars by Red Trader. Think of it like a trusty compass in the stock market. This tool gives you options to tweak it to your liking. You can change how it works, like switching from a regular car to a sports car. For me, I like to use a faster setting called Exponential for quick moves and a slower one called Hold for steadier ones. Set the fast part to 9 and the slow one to 21, and you're good to go. With these settings, it is easier to see what's happening, even if you're new to this. When you see a green bar below the middle line, think of it as a signal to buy. If a red bar pops up above that line, it's like a sign to sell. Surprisingly, these signals are often right on the money. But here is the catch. Do not rely solely on this tool. To avoid making mistakes, we add two lines, sort of like guardrails. Imagine you're drawing lines on a chart at plus 25 and minus 25. This helps us spot when prices have gone too far. We wait for confirmation before making a move. This change lets us predict when prices might change direction and make money from it. We only go for buying when the indicator goes below the lower line. And for selling, it needs to go above the higher line. It's about making good decisions, not rushing in. But even with these tools in hand, we're not done. We want one more layer of confirmation. Alright, let us talk about adding a handy tool called Hypertrend by Luxolgo. Think of it as fine-tuning a camera to see things more clearly in a picture. First, we'll make some adjustments to the tool settings to make the important lines stand out. We are not interested in all the extra stuff. We want to focus on one line. Now, here is the simple part. When the price goes above that line while it is showing red, think of it as a signal to buy. It is like a green light in traffic. This is when you consider buying and holding for a while. Conversely, if the price goes below that line while it is showing green, it is like a sign telling you it might be a good time to sell. This is when you think about selling and potentially making a profit. But here is a smart move. We do not want to risk too much of our money, right? Imagine you are walking on a tightrope. You would want a safety net underneath. So, we bring in another tool called the ATR Stop Loss Finder by Verifid. No need to change its settings. Leave them as they are. With this addition, we set a safety net for our trades. If things go south, this net catches us. And we don't fall too far. It makes it easier to reach your profit goals, whether you're buying or selling. Remember, it's all about being smart with your money and not taking unnecessary risks. You see, when the market isn't really going up or down, it is like a boat stuck in still water. There is not a lot of action, and it can be frustrating. But do not worry, we have got a tool that is like a wise captain guiding us away from that boring situation. Now that you have got the hang of how these indicators work, let us get down to some basic rules. We are talking about knowing exactly when to start trading, where to put a safety net, and where to aim for profits. It is like having a roadmap for your trading journey. Alright, let us simplify the idea of going short in trading. Think of it like deciding when to sell something. We want to sell when certain things happen. First, the momentum bars need to shoot up high. Second, there is this line in our hypertrend tool, and it should be green and going up too. Third, the price has to cross below that line and stay there. That's when we say, okay, it's time to sell. To put our plan into action, we place a sell order when the right moment comes. It is like casting a fishing line when you see a big fish. Now, we do not want to risk losing too much, so we set up a safety net called a stop loss at a specific level. Think of it like a lifeboat to save us if things go wrong. And we aim for a reward that is 2.2 times bigger than the risk we are taking. It is like saying, if I am taking a risk, I want a good reward. But here is the key. If all these conditions we talked about do not happen together, we do not make the move. Let me show you an example. We had a signal to sell, but wait, that hypertrend line was in red, not green. It means the market was already going down, so we might not get a big drop like we wanted. So, we wait patiently for the right opportunity. Look at how well this tweaked momentum bar got rid of those tricky false signals from the hypertrend. It is like clearing away the noise. Now, let us talk about going short, which means betting the price will go down. Imagine this. The momentum bars shot up above a certain line, and the hypertrend turned green, telling us things are looking up. So, we patiently watch the price, waiting for it to drop below the hypertrend's average line and close below it. When that happens, it is our signal to say, okay, let us go short. It is a bit like grabbing an opportunity when it's just right, like catching a falling star at the perfect moment. Now, let us switch gears and talk about how to go long, which means betting the price will go up. Imagine it as a change in perspective. Here's the deal. First, we want those red bars to drop below a certain line. Second, our trusty hypertrend should show a red color, which means it is signaling a potential downturn. Third, we are watching the price closely. It needs to break above a specific line and stay there. When all these conditions line up, that is our sign to say, okay, let's buy. We place a buy order once the price movement has settled. And just like before, we have got a safety measure called a stop loss at a certain level to protect us from big losses. We are aiming for a reward that is 2.2 times greater than the risk we are taking. It is like saying, if we are going for it, let us make sure it is worth the effort. Alright, let's chat about these candlestick moves. Most traders tend to avoid really sharp ones like these, because, well, almost 99% of the time, they do not lead to big gains. Usually, they either slow down or bounce back. So, if you want to play it safe and not risk losing your trades, you might want to skip these signals. Now let me share another example, but in simpler terms. Imagine you are considering a long position, which means you are betting the price will go up. You spot a signal, and it seems like the overall trend is pointing downwards. You can tell that by the hypertrend turning red. But then something interesting happens. The price surges above a certain line and sticks there. It is like a bearish trend taking a breather and showing signs of turning around. Alright, traders, I hope these rules make sense to you. Now, it's time to put them to the test, like a practice round, to see how often this strategy actually leads to a win. Okay, the backtesting is finished and here are the results. The win rate for the strategy is 63%, which is crazy high, and we gained over 101% of profit on our account. The profit factor for the strategy is 3.75, and we had 4 consecutive wins against 3 consecutive losses. Also notice that maximum drawdown did not exceed the 5%, which is really good for a scalping strategy. So yeah, traders, I definitely recommend this strategy. You can also try it on different markets, for example in Forex or stocks, and see how it performs there. If you're not happy with the results, you can improve the strategy even more by tweaking the settings on those indicators. Thanks for watching and see you onto the next one.